So I wanted to make this vlog a very long time already, because maybe it's your New Year's resolution, or maybe in 2020 you want to make your money work for you, not other way around, or maybe you just saw that the stock market are on the all-time highs and you want to be part of it. So if any of this reason, this video is for you, because in 5 simple steps you will know how to start immediately and most cost effective with the biggest possible returns on the stock market, and you don't need any knowledge at all. And even if you are already on the stock market, maybe this is something for you just to see if you are aligned to be a super successful investor. So let's, without further ado, let's go into the 5 steps. The video I aim to be 10 to 15 minutes long, so at each step will be 2 to 3 minutes maximum. So let's roll and enjoy.
Wolf of Dubai.
So the very first step is something that I read everywhere on the internet or in books or everywhere, and it says use only the money that you are able to lose. And I think that's absolutely incorrect, because this applied that you will lose on the stock market, which it's really hard if you follow this video's instruction. So I believe it's harder to lose money while investing into a business or into property instead, if you are not listening to all the simple steps of this video, because the stock market itself is pretty well safe considering all the history behind it. And therefore I think number 1 is take the money, not that you want to or can lose, but the money that is actually not needed at this point. Now the beauty about stocks is that you can, at any point of time, you can just sell everything and have the cash on your bank account, which is the beauty about stock market investing. Now on the other side, you have to be aware that this money should be there for the long run. So it should be not your day-to-day money that you need for expenses, your rent, your emergency fund. I think you still have to have a little bit of money on the side for some emergency. If you need to have a medical emergency, something at your house broke down or your car break down, you need to have some money on the side. And all the other saving, maybe it's $1,000 for you, maybe it's $10,000 for you, maybe 20, 30, 50, $100,000 for you. This strategy will work for you as well as with $1,000, as well as with $10,000 or $50,000. So let's dive into the second part. So the second step is really important. You need a broker. So actually you need a trading platform. And maybe you heard about those in the internet. This is a pretty easily to explain thing. Actually, it's like a digital or virtual bank account. So you just transfer your money from your usual bank account to this virtual bank account. So the money stays the same. Just with this broker account, you can start to pick and buy stocks. Now there's a lot of brokers out there, and I will not tell you which one to use, because first, I don't have any brand deal with any of those. Second, there is also, it's very depending on where you live. For example, if you live in the US, then maybe something around Robinhood is very good. If you are maybe something in Europe or Middle East, then maybe eToro is good, you know. So, but just to know the names that are out there and that you know these are brokers out there, is actually things or companies like Robinhood, Webull, M1 Finance, Charles Schwab is also very important and big, eToro, Fidelity, E-Trade, First Trade, Q-Trade. So there is a lot of them, and basically you can choose whichever suits you best. You know, some are having an app which is nicely made like Robinhood, some have like just a nice online platform, some don't charge for trades. I think Robinhood and Charles Schwab are very most known because they don't charge for trades, and they are very, you can even partially buy a stock. But this is number 3. We are going to buy stocks. Now, after you put obviously money into the broker account, now it's the day that you buy maybe your first stocks. And this is not what we actually doing. We are not buying stocks, because buying stocks is historically, factually, logically, and scientifically proven not the most best way to invest in the stock market. Now, you have to imagine, if you are buying a stock, you have to be right about the timing invest in the stock. You have to be right the business, the management. You have to be right about the industry. You need the industry trends, the numbers that they're putting out. You really have to dive into companies, and either you have really the time, then you can maybe choose 10 companies and invest in. But if you are starting and you want to make quick money, easy money, and I will tell you this, this method is making you 10% each year on your money that you invest, and you don't have to do nothing. And this is very true. We are virtually investing in a basket of stocks, all right? And we are investing into the 500 best companies in the US, the strongest economy out there. If the US economy goes down, then everything goes down. I'm telling you that because the US economy is so strong, Wall Street is so strong, and that's why, historically speaking, also the basket that we want to invest in is so important, because it's always changing. If a company don't perform so well, if they don't make profits, they get exchanged to a company that makes profit, and so on and so forth. So you get the point. And all the important companies are inside this basket, and this basket is called S&P 500. So if you're looking into the S&P 500 performance here, then you see that we are on the highest point ever. And I mean ever when we look at all since 1927, almost 100 years ago, the S&P rose 18,640%. And just in this year, we rose about 26.87%. Now, yes, you can see the first, it doesn't show me the beginning of the January, but in total, the stock market last year made over 30% gain. And this means if you have put $10,000 into the S&P 500, then you would get 30%, so $3,000 on top of your money without doing nothing. And you also don't have to worry about which stock is good, which stock. This is going all automatically for you, and you just paying 0.03% for it as a cost of managing costs. So it's very, very easy to start with this kind of thing. And usually, historically speaking, after such a great year, like 30%, another great year or good year is following. So you should start immediately. Thank me later for investing. Now I have to also tell you which one you have to buy. So you're actually going inside your broker account and you're purchasing VOO. This is the Vanguard S&P 500 ETF. And then you put your money inside there, and as I said, they are charging 0.03% as management fees. This is if you have invested $10,000 and you made like, it doesn't make how much money you make, but 3%, which would be $3 you pay them, that they manage all the stocks and everything. So you just put it there, you leave it, and you are enjoying, at least last year, 30% and on average 10% per year without doing absolutely nothing. And last but very important thing, obviously this is also paying dividends, which is a part of the profits that the companies give back to their investors. And this is actually 1.93% as at the moment. This is what you get in cash to your broker account. So let's say you have $10,000 invested, you get like $200 extra cash over the whole year, split into 4 payments, which is every 3 months. So this is extra cash that you can just put more of the VOO and be happy just making more money on your money. Now let's go to the last 2 steps. Step number 4 is actually just add more to it, because in the end, if you just put 10,000, yeah, you have in the end of the year maybe 11,000, 12,000, 13,000. But the beauty is that if you, let's say, get a salary of $2,000 and you can put a fourth of that into your savings, like $500 or $300, $200, whatever it is, but you can put this instead of laying on the bank account and waiting for you to spend it on some beautiful things. Rather go and put it also in your brokerage account, and this you accumulate actually more money. And imagine you would put every month $500. This would be around $6,000 per year extra, which gets also 10%, 20%, whatever it will be as a performance of this year. So just this will be more and more added to your account, which will make you much richer in the end of the year. And last step, just leave it. I mean, I know it's hard if sometimes your money on the stock market goes down. Now, if the stock market goes down, don't worry, because historically speaking, as we have seen, as I have showed you, we went one direction and this is up. And this means it's actually not a risk at all to buy stocks if you is thinking about the history. We had a World War I. We had a World War II. We had financial crisis. We had the Black Monday. We had the 2000 dot-com bubble, all this crisis, and you still would have much more money if you would just keep your money there. Don't even think, oh, this was a good year, I'm taking everything out and the next year it will be getting even more, or thinking that everything goes down and then you buy, because on even the most destroying financial crisis, which we had in 2007, just raised 50% of the S&P, which would be half of it. So let's say you would lost half, but if you would keep your money inside, you would have still much more multiple as of now. So I hope you liked the video. Like it, share it, make sure to subscribe my channel as well if you like this kind of videos about the stock market, stocks, financial breaking news, and I see you tomorrow because I'm vlogging every single day.